in what is the minimum maximum. So there is no minimum amount. The maximum is 50% of their net worth, and there are no restrictions like $250,000 or something. They can invest any amount which is 50% of their net worth. The taxation is already been taken care at the fund level. So for investors it's a tax-free capital gain. We have been hearing this fact that India is just 4% of the world market cap, right?
Whenever, so today you invest at the say 91 rupees dollar, and which was a fact, these numbers are true. When you're investing in the US market, you also have to pay a lot of these taxes, and you also have to do tax filing returns, IRS filing लगता है, tax लगता है. सबसे बड़ा तो CS जो हो वो बैठ के कैलकुलेशन करेंगे, उसका टाइम जाएगा, they will use a lot of money. All that is not required. When you redeem, it is net to pocket daily.
So we'll cover 3 different points. So first is we'll try to cover and try to understand why global investing is important for every Indian investor, and then we'll cover the nitty-gritties of various products. And now, so I have presented this presentation many times, so I'll try to cover it to the very basic level. But if you don't understand anything, just please note down and we'll cover it in the Q&A session after that. So first, let's try and understand what's the GIFT City, just to get the basic idea about it. GIFT City is a city based in Gujarat itself. There are 2 parts to it. It is divided into 2 sections. One is the domestic area and another one is the SEZ area. The SEZ area is called the GIFT IFSC. So this is actually India's answer to the DIFC, Singapore, or the likes of Hong Kong and other international finance centers. So there is one unified regulator there which is called IFSCA. Now the IFSCA draws the power from RBI, SEBI, IRDA and PFRDA, and it has created the policies on its own. So all the policies which are framed in GIFT City is organic in nature, and that's why they are trying to create these policies which are very much flexible, which promotes the free flow of capital or repatriation of the money, etc. So there is a full convertibility with 15 currencies, but dollar is currently the most prominent currency out there. We'll just cover briefly how the PPFAS structure looks like. So Parikh Financial Advisory Services is the holding company. We have housed the PPFAS Wealth in the holding company. Then we have the PPFAS Asset Management Private Limited, which is the mutual fund entity. Then we have the PPFAS Alternate Asset Managers, which is the GIFT City entity. We have branded as a PPFAS GIFT. Now the genesis of the PPFAS GIFT itself, comes from our idea of global diversification. So since we launched our mutual fund in 2013, we have started investing in the global markets as well. We used to diversify in the global markets since then. Now in 2022, RBI came up with the restriction that all the mutual funds collectively cannot invest more than $7 billion outside of India. But the global diversification is something which is a primary objective of our investments, and that's why we wanted to have kind of a product which continue to offer the benefit to the normal investors or the domestic investors, and we wanted to have a sustainable solution for it, and that's why we started our office in GIFT City in November 24, and then we got the FME retail license in April 2025. Now I'll just explain this term FME retail. So it is very important to understand this. In GIFT City, there are more than 100 fund management entities. There are more than 200 funds which are operating out from the GIFT City right now. But we have very handful of fund management entities which are retail in nature. Now, what is the retail funds? How is it different from other products? So you might have already heard about AIF Cat 3. You already know what the mutual fund is. Now the retail fund is something which sits in the middle of AIF Cat 3 and the mutual fund. In AIF Cat 3 you have a limitations of maximum 1000 investors. In AIF Cat 3 you have higher ticket sizes to the tune of $150,000 or 1 CR or whatever. Whereas in the mutual fund there is no such restriction, right? So in the retail fund as well, there are no restrictions in terms of maximum investors, as well as there are no restrictions in terms of the minimum ticket size as well. So that's why I said it sits in the middle of mutual fund and the AIF CAT 3. So we launched. Yeah, our ticket size is $5,000, and it's not like a static kind of thing. It can change as per the discretion of the fund, as mutual fund can change. Yeah, top up can be done in the denomination of 500. Yes. 511, 500. Yes. Anything yes. Above 5. And initially can be anything above 5,000 or 5,000. So somebody wants to do 5,001, it is allowed. Yes. So, we got this license in April 25. Then we launched a PMS, which is a global PMS in August 2025. This invests in the global markets except India. Primarily, we invest into the developed markets, and the reason behind it will cover in the later slides. Then in March, we had a twin NFO of I mean the S&P 500 fund of fund and NASDAQ 100 fund of fund. Uh, Now, if you see the bottom slide of this, there are two terms called outbound and inbound. For the benefit of all, I'll just explain it. Whatever investment goes from India to invest outside of India is called outbound, and whatever investment comes to India is called the inbound. Now, so these three ones which are highlighted in blue are already live, whereas the other products will launch in next maybe 1 or 2 years gradually. So just to compare these both products which we are already live with, so in PMS only Indian resident individuals can invest, because in PMS investment happens through LRS route. So it's similar to the domestic PMS where individuals get the shares in their broking account directly. It's similar to that only, and that's why whenever any individual is making any payment outside of India or remitting money outside of India, it goes through LRS route. What is LRS? LRS is liberalized remittance scheme. uh, all the remittance, maybe for travel, for studying, or whatever expenses to be borne or investment, all of those remittances go through a common route which is called LRS. Now, LRS has one limitation: one can only transfer $250,000 in a year, and it is the common channel. It can be used across. Uh, so in PMS, the ticket size is $75,000, whereas top up can be made in the denominator. I mean, anything beyond $5,000 after that. It's a active strategy, so there could be alpha generation as well. Now here the taxation is to be paid at the investor level itself. As the individuals are the direct holders of the securities, the taxation is also applicable to the investors only. Now there are no exit loads, no lock-in, nothing. Whereas in the passive funds, if you see, there are resident individuals as well as the corporates and all. Now the corporates or any other non-individual is not allowed to make any foreign remittance through LRS. LRS is only allowed for the Indian resident individuals. The investments of the non-individuals go through a OPI route, which is Overseas Portfolio Investment route, and any corporate who wants to invest in the foreign markets can invest in the GIFT City based fund only through this OPI route. So, in what is the minimum maximum? So, there is no minimum amount. The maximum is 50% of the net worth, and there are no restrictions like $250,000 or something. They can invest any amount which is 50% of their net worth. Now, so this is the passive fund, and that's why there is no alpha generation here, of course. But the only differentiating point here is that the taxation is been taken care at the fund level itself. So all the taxes are paid by the fund. Investors don't have to worry about calculating the tax, or figure out the complex ways of finding out what the tax is. So taxation is already been taken care at the fund level. So investors it's a tax free capital gains. Now, before going into the product specific products, let's cover why global investing is important. So we have been hearing this fact that India is just 4% of the world market cap, right? But that's not the only point why we should look for the global investments. There are multiple reasons behind it, and for the matter of discussions, I have distributed it into two parts. First is the access, and second is the diversifying risk. Now, when we open our gates for the foreign investments or the global investments, we get access to the to the companies which are very capital efficient, high ROIC business, or they are sustainably creating very good free cash flow numbers, uh, and it also offers very good value investing opportunity. Now that doesn't mean that India is having a lack of opportunities. It's just that the funnel gets wider, you get a bigger universe to invest. So that's the first point. Second is, historically we have observed that a lot of the innovation or transformative themes which has played out is actually played out outside of India. India has been a great service provider or the follower of trend, or a very good in terms of finding out the efficient and effective ways of doing things. But the problem is the value capture of the ecosystem would have already have happened at the initial level or the front layer of these innovative cycles, and therefore it's very hard to find this kind of opportunities. Let's take an example of maybe Google Cloud or AWS. They are expanding at very big scale. They are investing close to $100 billion in terms of capex. They are getting revenues from all over the world now. It's very difficult to find this kind of companies in India. Then we have companies like TSMC or ASML. They have created a kind of a monopoly in their own niche, and so through global investments, we actually get opportunity to invest in these kind of transformative trends or innovative companies. In fact, if we look at the various FMCG reports or India consumption story, you will realize that uh, lot of Indian consumption is now becoming a is going towards a premiumization, as people, uh, it may be because of rising income levels or change in demands or habits, etc. But the I mean, the consumption is going more towards a premium products now as income levels are rising. So, a lot of people are coming out of the poverty line. They are traveling a lot uh, to world, etc. So Boeing and Lockheed Martins are benefiting out of it. Then, as people are more focusing towards education and all, and they are becoming more tech savvy, companies like Apple, LG, Sony, they are benefiting out of it. A lot of the people are moving up the scale in terms of their net worth. They are becoming HNIs and all. They are spending for LVMH and companies like that. So, in fact, if you look at the management commentaries of these companies, they are also seeing India as a big market for their growth. So, we are anyway spending heavily in these kind of companies. Why not to benefit out of their growth stories? So, we have covered the excess part of it. Now, let's cover the risk part. Now, we have heard this saying called don't put your all eggs in the same basket, right? And I mean, since last 5-10 years, people have understand and have taken this thing very seriously, and they have started diversifying into multiple assets, multiple kind of companies, etc. But again, putting all the baskets in the same lorry itself is attracting some kind of risk attached to that particular lorry. So that's why investing all the investments in one particular geography or one country will attract the country specific risk. So we had certain events like demonetization or GST rollouts, and because of that our markets were impacted, whereas the other markets in the world were not impacted out of it. So as we start diversifying into various companies, we see our risk going down. But if we start investing in the multiple global companies as well, the risk goes down further. It actually eliminates the country specific risk. So these kind of events which we discussed will insulate, I mean, the portion of your portfolio will be insulated from this country specific risk. Now we understood that, yeah, so risk diversification is necessary and global diversification will help to reduce this. But where to invest? So, as per statistics, any correlation which is below zero point 0.7 is considered to be a loose correlation, and loose correlation means good diversification. So, I've tried to map here 3-year rolling returns of NSE 500 and MSCI World. MSCI World is basically index for all the developed markets. In MSCI World, 70% is US, 5% is Japan, UK, etc. So what we found is for 80% of the time the correlation has been below zero point 0.7, and if you see these dots which are above zero point 0.7, these are the times when there were any massive global event happening out there, or there was some recovery out of those massive events. And otherwise we have seen the correlation below zero point 0.7, and that is considered to be a good diversification strategy investing in the developed markets. Now let's move on to the now of course there is one more aspect, or I would say one more benefit of the global diversification, and that is the currency hedge. So once you start investing in dollar, you are hedged against the rupee. So if there are any significant rupee depreciation happening or going on, you're insulated by it. Or you can also consider this as an incidental benefit of the investment. So uh, if you are getting 11% dollar returns in INR, you are actually getting 14% if your rupee is depreciating by 3%. Now let's move on to the products. So first is the PMS, as we discussed. Uh, so this is the $75,000 ticket size product, and the shares will be held in the individual accounts. Now the investment process and everything continues to remain same. So PPF, whatever strategies PPFAS FlexiCap is following, we are deploying the same strategy for this PMS as well. We have a common research team of 20 to 25 analysts who covers not only the domestic sectors but also covers the global sector as well, global companies of those sectors. And so this PMS we launched in September 25, but the PMS is kind of a new product, but the underlying base, which is the research and the companies which we are investing in this PMS, is quite old. We have created a research database of foreign companies, some close to like 400 to 500 companies, well before we launched the PMS, as we were investing in the global markets in FlexiCap. So the research database is quite old, more than 10 years old. Uh, and I mean we follow the same strategy. We try to partner with the company. So whatever investments we do from the PMS, we intend to hold it for at least 5 years. Uh, then we are very value focused, and so I'll just spend 1 minute there, because so valuation is something which we remain very sensitive about, and we take care of the valuations at every level. So when I say every level, it's at the two levels. So we have created a model portfolio for these particular product. What happens is, we whenever any investment comes in, we use this model portfolio as the reference, and we invest the monies as per the model portfolio. Now the first filtration of the valuation happens at the model portfolio itself. At model portfolio, at certain point in time we might hold some cash because we might not be finding any attractive opportunities out there. So that's the first level, at the model portfolio. Now we take this conscious call of valuation at the individual portfolio level as well. Let's say some investor who would have joined our PMS in the first week of when we launched it, will have the same portfolio as the model portfolio. But any investor who would have joined recently, like 15 days back or 20 days back, might not find the similar allocation. And the reason behind that is, during these 3 months or 4 months or 5 months, whatever, due to market movement, some of the stocks would have gone beyond our valuation comfort. Maybe the stock would have surged 50%, 100%, 200%. And for that matter, we are not investing in those companies. We'll rather wait for stock to cool down, come back to our comfortable valuation, and then invest in those stocks. So these are two different filtration which happens at the PMS level. Now just to spare some facts, will remain 70% invested in the equity at all time. This is at the model portfolio, at the fully constructed portfolio level. uh, None of the stock will be more than 10%, none of the sector will be more than 25%, and the investment geography majorly will be the developed markets, which is US and Europe, or Southeast Asia or something like that. Now this product is only allowed for resident individuals. We are soon going to open this for the NRIs as well. This is a USD denominated product. There is no exit load, no lock-in. So we have partnered with Interactive Broker for now to offer this services. We'll open the investors account with the Interactive Broker and take care of all the onboarding and reporting requirements. The ticket size here is $75,000. Management fees is 2% plus GST. Half of it will be shared with the partners. And in terms of operating expense, for the first year, it won't be, so there are expenses like brokerages, or if we are investing in European markets, we'll have to convert dollars into euro, and expenses like that. All in all, the operating expense won't be more than 0.15% in the first year, and from second year onwards, it will even go beyond at maybe
Brother.
0.07% or so. Now here, so the investment is done through LRS. So the maximum limit per investor is $250,000, and for a year, for that particular financial year. Uh, yeah. Now, as the taxation or the tax is to be paid by the individual investor, we'll have to understand the taxability of this particular product. So first is, whenever any Indian who is doing an LRS, there is a TCS which is applicable. So whenever any investor who's remitting more than 10 lakh rupees, there will be a TCS of 20% on the amount. Now TCS is, you can consider it as an advanced tax kind of thing. So if there are any advanced tax liabilities, or there are any TDS liabilities to be paid at the end of quarter or month, you can adjust these TCS against those TDS, against those tax liability. And if the TCS, whatever you paid here, is not completely consumed in the year, you can take refund of it at the end of the year as well. So that's the TCS. Second is the capital gains. Now, as the tax residency of the investor is India, the taxation of the capital gains will be applicable in India itself. And here the capital gains tax is different from how we see in the equity markets in India. Here the holding period for the long term capital gains is 2 years, not 1 year. So anything beyond 2 year will be long term capital gains, taxed at 12.5% plus if there are any surcharges. For holding period less than 2 years, it's not 20%, it is as per the slab rate of the investor. If investor is in 20% tax bracket, 20% will be applicable. If investor is in 30% bracket, 30% will be applicable. So third is the dividend income. So as we would be investing in the US stocks will distribute dividends, and so US has this regulation that they will deduct 25% of the dividend as the withholding tax. This kind of a dividend distribution tax, but applicable at the investor level. So let's say if any investor is getting $100 of dividend, $25 will be deducted by the US government directly, and you'll only get the $75 of it. Now let's say an investor is in the 30% slab rate, and investor have to pay $30 as tax in India. They can take credit of this $25 whatever they have paid in the US market. So they'll only have to pay the $5 which is over and above $25 here. Now fourth one is the estate tax. Now this is applicable at the net worth and not on the gains. So if there is any investor in India who have invested outside of in US markets, and let's say investor passes away and they have to transfer their holdings or net worth to their legal heirs, so there is an estate tax applicability which is beyond $60,000 of net worth. The slab rate is, it starts from 18% to it goes up till like 40% of it as well. So these are just the snippets from our fact sheet. So if you see the since inception return, it is kind of not performing closer to S&P 500, and the reason behind this is the consolidated number and not the model portfolio number. So if you compare the model portfolio number with this returns, I think that is still better. Now what happens is, lot of investor comes, all the investor comes at different point in time. Let's say if investor would have come in November or December or January, they might be invested at the peak valuations, right? Because the S&P 500 was kind of at all time high, whereas for the comparison we use the S&P 500 performance from the inception. So that's why you can find this kind of difference, because it is at the consolidated level. Now this is the sector allocation. So our PMS is diversified into 7 different sectors. Despite of being a concentrated portfolio, it is fairly diversified. Now let's talk about the S&P 500 and NASDAQ 100 fund of fund. So everyone would know these are the indexes, these are the US based indexes, and uh, whatever funds we have, these are the passive funds. We directly invest in the S&P 500 ETFs and NASDAQ 100 based ETFs. Now, just to understand or just to guide investors which index they should choose for investment, I'll just compare it on the for few on the basis of few parameters. So S&P 500 is considered to be a barometer for US economy. It has a market cap coverage of 80%. So whatever US market cap is, 80% of it is S&P 500. NASDAQ 100, it's a barometer for innovation and technology. It's a tech heavy kind of a index where the technology weighted itself is 64%. Whereas if you see in S&P 500, it's only 34 or 35%. So it's a fairly diversified index, S&P 500, whereas the NASDAQ 100 is a concentrated towards innovation and tech. Now, if you see the geographic split, now this is common across all the US based stocks. So all the US companies are have a very good diversified revenue stream. So they are drawing at least 30 to 70% of the revenues outside of US. So it's a the diversification sit itself in the at the company level also. The dividend yield for S&P 500 is quite higher. It is somewhere in between 2.5 to 3%, whereas for NASDAQ 100 it's lower, as the tech companies continue to invest in their capital cycle, or they do capital investment constantly, so the dividend is quite low there. Now, as we have spoken about the mutual fund limit of $7 billion for remittances for further investments in the international markets, that particular limit is not applicable for these funds. So these funds are uh, beyond that. And there is, so we talk about the estate tax as well, where investor has to pay 18 to 40% of their net worth as inheritance tax. That inheritance tax is also not applicable in these funds. uh, it's a very tax, I would say, easy from the tax compliance perspective, as the tax are paid at the fund level itself. Investor don't have to worry about doing the complex calculations, or if you would go to any CA today, and I myself is CA and I can understand the pain for that. If you would go to any CA and ask him whether they'll be able to do the calculations of foreign investments, half of them would say no, or they'll charge very hefty amount for it. That we are already taking care at the fund level itself. Third is OPI route is only allowed through GIFT City based vehicle. So if any corporate wants to invest outside of India or want to invest in global market, they'll have to go through the GIFT City based funds only. That's the only route available for them. Now, optimization of cost, this covers the foreign exchange cost and all. So let's say if I or any retail investor would go to bank and say I want to do LRS, they'll charge 1.5 to 2 rupees over the bank rates, right? Whereas in this particular fund, we have negotiated with a lot of banks. The FX cost here ranges somewhere between zero point 0.2 to zero point 0.6 rupees per dollar, which can be 1.5 to 2 rupees for a retail investor or a rate card. Now, so we have a very strong compliance and governance framework, as all these funds are registered with IFSCA, licensed by IFSCA, which is an authority. This is a very structured and a compliant model versus if someone is investing directly through any brokers, as they are not registered, they might not be registered with some of the regulators. Just to cover the facts about these two products. So yeah, so resident Indian individuals as well as all can invest. The minimum ticket size is $5,000. Top up is $500. The expense ratio is 0.60. Half of it will be shared with the partners. Now, as we are also investing in the ETF, the ETF would also have some cost attached to it, or some TERs attached to it. So if we include the underlying funds TER, which may range from 0.05% to 0.20%, the maximum expense which investor would be paying is 0.70 to 0.85 for NASDAQ 100. you'll see there are two different NAVs in this particular fund. What's that? So as the tax is paid at the fund level itself, we'll have to take care that whether investors are exiting before 2 years or after 2 years, because below 2 years it's 42% tax rate, whereas for the long term beyond 2 years it's 12 and 14.95% tax rate. So there are two different NAVs. If investor is selling before 2 years, then or redeeming before 2 years, then they'll get the short term post tax NAV, which will of course be lower than the long term post tax NAV. So looking at the fact sheet, one may have this question that uh, why the return of our fund is different from the index. Idea is, this is the passive fund, this is the tracking product, it should not have any tracking error, or the return should completely match, right? So the reason behind this is we invest in the ETFs which are European based, and the European markets closed by 9 p.m. in as per Indian Standard Times, whereas the US market closes at 2 a.m. in the morning. So there is still a 3.5 hours where US market is still open, but the European market ETF is closed. So the reason here is after 9 on the 30th March after 9 p.m. the index itself has gone up by 0.80 to 85%, and that's why you can see that difference between the returns here, and it is applicable for the same like S&P 500 as well. So now the global investment is definitely a difficult task, as you already have seen. Like, there are a lot of complexities, and one has to go to bank and fill up the forms, they tell them how to do LRS, explain them and everything. But we have tried to simplify the process as much as possible, and I'll just invite Hema ma'am to cover that part.
So what I'm going to do now is a lot of it is going to be a little duplication. Yeah, please bear with me, but this is how I want you, my distributor partners, to sell this product. Okay, and how to find the right investor, how to make him understand what the product is all about. So do give me a few minutes. You please stop me in between if you have any questions. Okay, so before we get into all this, I just want to let you know why was PPFAS gift born. Okay, we celebrated 13 years of our I just started, sir. Thanks for the opportunity. And I was telling your team that, how you have to sell the product. So we just start, and I'll tell you why was this born. Okay, why were PPFAS gift born? So we celebrated 13 years of Flexi Cap on last Saturday. Now, when we started with the Flexi Cap, the best thing that we had was the US investments. Okay, we were an expert at it, and we had US stocks. At the start, we had about 23 to 27% US stocks into our portfolio. Now, that was a very good thing because, see, this product is retail. Now, retail person like you and me, we cannot go and invest in the US and have global diversification and falana and dhimka. So, we were possibly doing this through our Flexi Cap. In the year February 22, what happened was RBI said, guys, limit is breached, no further investments. We did not sell a single stock. There have been some mutual fund partners who have sold off their stocks, and they had a little bit of a window to take more, like ETFs, Motilal, and a lot of others. We had not sold anything. As the local pie grew, it was like 70, 80, 90. We are now in one digit in the US stocks for the Flexi Cap. Now, all our investors and our distributor partners said, guys, you guys are expert at the US stocks. Why don't you invest? Why don't you start? Now, Government of India did this very beautiful thing. They said, we start with PPFAS gift. Okay, they said there is a gift city option available. Now, what does Government of India want? It wants to match with the world's financial centers like Dubai, Singapore, Mauritius, all of it. Now, we want that kind of development in our own country. So, in the entire mainland India, they removed one small portion called Gift City in Ahmedabad. That is foreign within the country. So, I only deal in dollars. I have a separate onboarding requirement. I have a separate investment journey. All of it is separate. My regulator is separate, IFSCA, which Akshay explained. So coming to that, now we want to do global diversification, okay? And we said, why is India allowing this? India said, rasta nahi hai, nothing further from India. But the Gift City route, the entire runway is open and you can invest wherever you want in the whole world. That is what they started with. Now we come back to what happens here. Why does an investor need to globally diversify? Okay, now let me give you a small example. We all like chocolates, Nestle chocolates, okay? Nestle chocolates has about 3 to 4% of revenue from the Switzerland market. Apart from that, the entire revenue comes from all over the world. So Bangladesh bhi khata hai, India bhi khata hai, UK bhi khata hai, US bhi khata hai, everybody else. Nestle makes profit from all over the world. You imagine another thing. You have LG refrigerators, you have Samsung phones, you have everything. Make in India karo, make in India mat karo. Jo bhi hai karo, the parent is sitting outside of India. You are giving the money to an Indian manufacturer, but uska baap is sitting somewhere outside the world. Now you are actually helping the parent company, so why not participate in it? That is the thought. Okay. Now because of all this, now if you look at it, 100% of the world I will take as a cake. India is only 4%. मेरे पास सब कुछ है. I have pharma, I have aviation, I have everything. But that is only 4% of the world. I am missing out on 96%. If you want to do that 96%, how do you do it? See, the rich people, they can do US investments, IRS filing कर लेंगे, जो भी है वो कर लेंगे. What about the general common man, the retail person? They really cannot do it. So now at this point in time, we have started with 2 funds, which is as simple as Nifty 50 जैसे अपना है, simple passive vanilla funds. Okay, कुछ भी अलग नहीं है. You are just buying the entire NASDAQ or entire S&P 500. Okay, NASDAQ में क्या है? IT led AI heavy funds. पर उनका पैसा कहाँ से आता है? सबसे आता है, पूरी दुनिया से आता है. Like I said, Nestle, Samsung, LG, cloud हम सब यूज करते हैं. Suddenly Google started asking us money for the cloud. Okay, हमने सबने पे किया because हमको photos रखने हैं. Okay, so they are earning money from all of us. So essentially what we are trying to do here is we want to participate in their entire scheme of things. Now, what happens to the passive funds? We have 2 passive funds and I'm going to tell you only 2 benefits of this structure. It took us a long time from 2022 to 2026 for us to create the entire product and bring it out to you guys. Okay, it's a very special product, simple vanilla product for a common man. क्यों उसे invest करना? Now, whether Modi says कि US जाओ, नहीं जाओ, there are some middle class people who want to send their kids for Ivy education, Ivy League colleges. Okay, उनको डॉलर तो चाहिए, तो डॉलर जमा कैसे करेंगे? Now rich man वो तो एक ही साल में 2,50,000 जो LRS लिमिट है वो फीस भर देगा, उसके पास डॉलर एसेट्स भी होंगे तो वो घर भी खरीद लेगा. What about the common man? What about the retail guys? They cannot have that kind of money. So this is the place where people have use of the dollars. They can invest it here. Okay, and I will now tell you 2 benefits of this. So just going through my presentation, I will be aside here. Okay, so we spoke about global core. We spoke about this, why Nestle chocolates, LG, you can say that to your investors. Innovation alpha, low correlation, currency tailwind. This is something which is important. इंडिया में मुझे ऐसे लगता है कि इंडियन करेंसी कभी भी गिरे नहीं. But we've only seen it go south. Whatever we say, it's going south. But very important, do not tell your investors that you are investing in dollars or INR. Say that you are participating in the global companies who are earning money all over the world. बांग्लादेश से भी उनको फायदा हो रहा है, श्रीलंका से भी हो रहा है, नॉर्वे से भी हो रहा है, सब जगह से हो रहा है. Okay, so this is an additional benefit. Okay, now there are just 2 big benefits for this entire process. Okay, now there is a question an investor may ask you, I can buy Nifty 50, similarly I can buy NASDAQ and S&P onto the US market. So why am I going through all this rubbish? आपको मैं 0.60 क्यों दूं? 30 आपका, 30 हमारा, okay? 0.60 में आपको क्यों दूं? I can buy directly, no? Yes, you can buy directly. There's a lot of traction in the LinkedIn. They say ये बना है, why can you buy directly? Now we are not able to convey to the whole world, but thanks for your time. I will let you know why. Inheritance protection. Okay. Now Akshay told you guys $60,000. Now see, this is a magic thing. US is making money from all over the world. See how? $60,000 किसी के पास है investments, उसने US market को touch किया, which means to say if that person dies, उसके बच्चों से वो tax लेगा. क्यों लेगा भाई? Why do you have to pay inheritance tax for your own money? And for the US guys, it's a bigger limit. For all over the world, it is $60,000 only. As soon as you touch US market, be it PMS, be it your S&P, anything, they will charge inheritance tax. Okay. So this particular product is inheritance protected. How? $60,000 ho ya $1 lakh ho, whatever is the amount, the Trump cannot take the money from your kids. This is yours to keep, your kids to keep. Okay, that's one big advantage. So because your US direct holding can face up to 40% of estate tax. Okay, so this one, there is no such things. Second is my, okay, so 40% tax, and why is it like that? Because it's domiciled through the Gift City Fund. The government of India has done it, and we are doing it for negating the US estate tax. So a lot of mind has gone through in creating the product. Then it protects your future, and obviously it is Indian regulatory framework. Suddenly जैसे जैकमा को पैकअप करके चाइना ने भेज दिया था, वो यहाँ नहीं हो सकता. This is India and it is strong compliance regulation. So this is comfortable. Now this second one is very, very important. Post-tax NAV advantage. Okay, now what does this mean? And this one, my friends, is important for the companies, for individuals, for anybody. Okay, well, this Akshay has already covered, but I will again tell you once. Taxes are managed in-house. The entire tax team, we are paying for it, we are managing it in-house. Now let me give an example. When you redeem your investments from your domestic mutual fund, once you redeem, you'll take the money. उसके बाद क्या? Tax consultant में से इतना इतना तुम्हारा holding period है, ये तुमको tax लगेगा. After which the money becomes yours. Not in this product. This product is post-tax paid. So when you take the money from this, when you redeem, the money is for yours to keep. No further taxation. Okay. And I will take you through how the NAV has progressed and how the investments have done good. Whenever, so today, you invest at the, say, 91 rupees dollar, and which was a fact, these numbers are truth. February, 91 rupees was $1 and the NAV was $100. Okay. Now it is $96.96. हमारा जो post tax NAV है, I give two NAVs every single day, long term and short term. When I say long term NAV, I give for 24 months. If your investor is with you, you give them long term NAV. आपको ये पैसा आ जाएगा. Long term NAV into dollar rate is for the investor to keep. उसके ऊपर zero tax. Okay, no further tax. When you're investing in the US market, you also have to pay lot of these taxes, and you also have to do tax filing returns. IRS filing लगता है, tax लगता है. अब सबसे बड़ा तो CAs जो हो वो बैठ के calculation करेंगे, उसका time जाएगा. They will use a lot of money. All that is not required. When you redeem, it is net to pocket daily. Calculate करो NAV, calculate करो number of units, dollar, and you are home. Obviously, we're going to do this now on our website. In INR terms, we are going to show it. But we are still not able to, because we're not able to catch the original INR that it started with. But this is how it is. Okay, this is very important. And obviously, this is built for efficiency. So no exit load, no entry load. Kabhi bhi aao, kabhi bhi jao. Okay. Absolutely single right now, $5,000, which is 5 lakh roughly, mota moti. That's how it is. We have a very seamless digital journey. A folio is created in less than 10 minutes. The folio gets activated next day or 2 days after that, and you can start investing. Okay. Now, operational readiness. So you guys are my partners, and I want to let you know, I don't want you to think about isko investor ko account opening में क्या क्या करना पड़ेगा, या dollar investment है छोड़ दो यार. No, if somebody wants to do it, this is a simple product. It cannot be simpler than this. I only need 2 things. I need a PAN card, I need an Aadhaar card. Only 2 things for a US dollar investment. And I need a check copy to tell me which account the money will finally land when you redeem. These are the only 3 things I need, and your investment is as simple. So you focus on asset allocation, do not worry about the operational hurdles. Okay, efficiency, my friends, is your currency, and we absolutely know this. Okay, so this is an efficient product. So when you have your investor, you can tell them your folio is created in less than 10 minutes and it is all digital. Okay. When we look at the form filling and all, it's absolutely same. The way you get it, the mailbag services, or the way you can see how much your investors are, or under your distribution code or under your particular code, how many investors are there. You can get that from CAMS normally abhi. Similarly, you can get it from here. It is just gone online. Okay. So this is how it is. This is how the investor dashboard looks like. And the numbers have actually changed. This is as of April. Total value, whatever, 2 funds, direct plan, indirect, regular plan, whatever. This is how it will look. Now we'll quickly take some myths and truths, and we'll do some fact checks on the global investment. Okay. So first one, this is important. What will your investor ask you? INR account चाहिए कि dollar account चाहिए? Sir, किस में डालना है? You are doing dollars. I'm not a bank. I take dollars. How do you do it? So you can do this investments from any bank account in the country. Okay? INR एक form आता है where you need to have the details of the destination account. That is pre-printed. You can hand it over to investor and it comes to us. Now, there's another magic. Like you have Google Pay in our world, we have Glomo Pay in GIFT City. And there are other things coming up, but as of now, Glomo Pay in GIFT City. 4 banks, ICICI, HDFC, Axis and IFSCA. These 4 banks. These 4 banks में अगर किसी का इन्वेस्टमेंट है, तो जैसे घर पे ड्राइंग रूम में टीवी देखते देखते वो डॉलर इन्वेस्टमेंट कर सकता है, फोलियो खुल सकता है in 10 minutes. Investment is seamless through Glomo Pay. Only $2 per transaction. Like how you pay delivery charges to Amazon, 49 rupees your DMart delivery charge. Similarly, this Glomo Pay is charging $2. Okay? And another thing, I think Akshay covered this as well. When we want to go abroad and we try and take dollars, interbank rate पे हमको मिलेगा 95.75, 95. Let's assume 95.50 is my dollar rate as per the phone internet. IBR, interbank rate. We have partnered with the banks, and as of now, I'm still working with 2-3 more banks. What we are trying to do is get the best rate for your investors, for my investors. IBR pay 20 paisa is given by ICICI Bank. HDFC 60 to 80 paise, Axis, IDFC 60 to 80 paise. They are going to reduce this companies. So if you go to Dubai, if you want to go to US, you cannot buy dollars from these banks at this rate. This can only be done through PPFAS, ICICI, that bridge. That dollar rate is plus 20 paise. This will be out in the website as well. We are working with Kotak, we are working with AU Small Finance Bank, HSBC. All of these, we are coming out with good dollar rates. But अगर ये चार banks हैं, तो आपका investor directly invest कर सकता है. Okay, so quick ones. So no, we do not need a separate foreign bank account. Foreign tax means complex tax filing नहीं लगता. Now I want to tell this one to you guys. If your investor is asking कि filing लगेगा क्या? What we are saying tax तो नहीं लगेगा. Okay? Filing भी नहीं लगेगा. Okay? Now there is a grey area. Government has not clarified it yet. In the investor's return, there is something called Schedule FA, Schedule Foreign Assets. उसमें mention करना कि नहीं is a grey area. What we are saying is, guys, please mention. उसमें लिख दो आपका क्या है investment, so that your investors do not have queries from the income tax team. Simple, because anyways पैन पे खरीदा है, आधार पे खरीदा, गवर्नमेंट के पास डेटा तो है ही, मेंशन कर दो, जान छुड़ाओ. So Schedule FA, we recommend put it. Okay, so this is important. Now, overseas limits have been blocked for foreign investments. Yes, we spoke about it. The दरवाजा बंद है, back door खुला है, उधर रनवे लगा है. Okay. Only ultra rich can invest through GIFT City. देखो, to be honest, earlier dollar investment was very ultra rich. Singapore में Swiss bank accounts, all of it. Now, common man who actually needs dollars in few years time, उसको बच्चे को भेजना education के लिए, उसके कोई बच्चे उधर हैं, उसको डोमेस्टिक कुछ, ये can invest through this. Simple, absolute simple route. Okay, so resident can invest through the LRS route starting $5,000. Now this is very important. So all these myths and truths that we've collected, this is a year's mehnat, because a lot of questions people had. So we are just clarifying this on a presentation sealed by us. This is what it is. Money is not going to be locked in. There is no exit load. There is no entry load. Okay. Money redemption less than 7 days, we will give you the money back. When we give the money back, the dollar and INR rate, whatever conversion, don't worry about it. No tax also on that. Okay. We are saying 7 days because time issue, US holiday, India holiday, 2 o'clock को दिया, 7 बजे दिया, रात हो गई, all that. We saying 7 days minimum हो जाएगा, उसके अंदर ही हो जाएगा. Global investment has hidden cost. It usually it does, not here. This is a plain vanilla mutual fund product. Actually, I call it as DIY. Flexi cap, foreign investment नहीं है, DIY, PPFAS gift. जितना करना है कर लो. Okay, so that's my DIY product. They say it's a long investment list of options to invest abroad. It is actually. There are a lot of options, but this one comes with tax efficiency, no inheritance tax, filing नहीं चाहिए, CA नहीं चाहिए, all that. Okay. It's more risky to invest outside. Guys, it is risky not to invest outside, because you are sitting in one कुएं का मैदा, only 4%, and you're thinking you have global diversification, which actually is not the case. Okay, so this is what it is. Now, I want to take this moment to tell you what is OPI. Okay? Very important, short slide, just 2 slides on it. In fact, only 2 benefits. OPI is Overseas Portfolio Investments. Okay? Now, till recently, company का खुद का पैसा was not allowed to be invested abroad. Okay? Lot of RBI approvals were required and falana dhimka, there was no road, nothing like that. Now, what RBI has done this in this entire GIFT City world is 50% of the company's net worth can be closely, easily invested in these 2 funds, or rather GIFT City funds. Okay, that is called OPI route. How does it work? Non-individual, जैसे company है, LLPs, partnership registered, no HUFs, okay, no trust, because उनका scheme is different. These ones which are like permitted, उनका balance sheet चाहिए last year's or last 2 years, whatever gives comfort to the CA. CA has to make 1 pager certifying the net worth of this company so and so. Okay, 50% of that with 0 questions asked, you can invest in this fund. Okay, this now, so if you look at it the way, you partners can sell the fund For individuals, limit is 2,50,000 LRS, Sava 2 crore. For companies, there is no limit. 50% can be given. Now, many of the companies, and we have about a good 2-digit number on the companies, they want to do this. What are they doing? They're manufacturing, making in India for their parents. They're not able to invest in dollars. So they want to actually invest in dollars. They're able to do. So now, because they have this route, it is done. My friends, this is a little very important. I really don't know for how long this route is open, but as of now, this route is open. 50% of the OPIs. Okay. So there's two benefits. The OPI advantage. So earlier, HNIs, family offices, whosoever were not able to invest anything outside of India, this is the only route available. Mainland route available. And if you want to sell this, your ticket size, sky is the limit. 5,000 is minimum, maximum up to 50% of the company's network. So that's a good ticket size. And obviously it is IFSCA regulated. And I will not get into this. This is the second advantage, post-tax NAV. Company को भी मिलता है, individual को भी मिलता है, filing nothing is required. Okay, so this is where it is. Now, I just want to take a minute to show you our website where you can see the NAV and where you will be able to see the fact sheets.